You will talk a lot about your business model, but investors in the public markets who are not that mature or sophisticated actually focus far more. I mean, you said yourself that they don't understand the payments business as well as international investors do, and that may well be correct, but they want to see a company profitable, and nothing wrong with that. So there are many people who analyze Paytm and they believe that you will actually be in a position to show profits in FY24. Some believe that it will not happen before FY25. What's your own assessment? When do you actually start to show profits?
Next few quarters, when you see the numbers, you would see a trend line that would give you far bigger comfort of what timeline it would be. I am not going to comment on whether it is 23, whether it is 25, whether it is earlier, whether it is later. I definitely am going to tell you that our next 2 quarters, which sort of we are living through, one quarter we are in the process of audit and completing, and we should soon announce that quarter's result. And second quarter that we are actually as a part of subsequent quarter that we are part of right now. Numbers are phenomenally different, which simply should be when they get exposed, publicly announced, they would be far better trend to judge what your question is. I, being a related party and conflicted with this disclosure itself, that I'm not going to give you I mean, I'm naive enough first entrepreneur first day post listing where I cannot tell you this is a good year to look at it. I definitely can say the numbers are far phenomenally better. Year on year, we by the way gave 60% year on year revenue growth, and contribution grew 3 times, 300%. I mean, the 3 times the contribution margin grow for us. So we are growing margin, we are growing absolute value, and we have reduced the cost. That's what it is.
Okay, fair enough. Okay, but I didn't expect you to give me guidance about future profits. But tell me this. I mean, from a layman's point of view, your business as we see it has 3 major blocks, which is your mobile wallets or payments business, which is your bread and butter today. There is the financial services business, which you're moving aggressively into. And then there is e-commerce. I mean, in layman's terms. Can you tell me in the next 3-4 years, as your business becomes or evolves, how much of your revenues will come from these 3 portions? Would it be fair to say, or aggressive to say, that maybe 50% of your business will come from payments and mobile wallet, and the remaining 50% could come from, say, financial services plus e-commerce? Would that be fair, or is it too aggressive?
Well, I think that financial services business, which is in its infancy, and one of the important things for you to notice that financial services business, which is led by credit revenues, started for us June 2020 when RBI gave digital lending platform guideline. So our credit business, which last year, in last quarter we did 1.3 million loans. We did in last year March quarter we did 1.3 million loan. And in September quarter, we announced this number in RHP, 2.7 million loans. And this growth is to a level where the numbers that we would have done in a quarter last year are being done in 30 to 45 days. And that means that there is a ramp up of financial services unexpectedly much higher and much better than we would have imagined. Now, this kind of ramp up puts me into a context that exactly what you're asking, that whether the payment and commerce and financial services will split like half payment and half other. Maybe financial services may just take a lot larger revenue unexpectedly because of the growth and the demand that we've seen on our platform. But it would be fair to assume that payment, which constitutes around 70% of our revenue, will not be such large because other revenues which are not yet kicked in would have started to take shape. Should I say that in 2 years will be 50-50? I mean, I think it could even, yeah, I mean, 50, 45 or 55, some number in that range is a good fair number to ask, that other businesses, non-payment businesses, would have started to become majority of revenues.
Oh, sorry, I got confused out there. In 2 years, are you saying 55% will be payments and 45% will be financial services plus e-commerce?
No, I was saying that non-payment revenue could become majority revenues for us in 2 years. Non-payment is commerce and financial services.
That's very interesting. But and we'll talk about each of these 3 blocks because we are coming to the meat of the discussion now. So let me start with the mobile wallet or the payments business, which is still 70% plus, and as you say will become maybe a minority, less than 50% in in 2 years. How do you see that business evolving? Because you can see that UPI is gaining ground, more players are entering the field. Google and PhonePe, as we know, have made some inroads into the UPI business. Is it possible that the yields may start dropping off in that business? I mean, you will still reach more and more people through your payments platform, but could the takeaway or the yield that you make or the profit that you make, that margin goes down over a period of time? Is there a risk?
The payments business model is led by merchants' interest and ability to pay us for the sophisticated or complex business or payment problem we are solving. I give you an example here. Imagine a particular electronic shop in RK Puram which is selling television or white goods. Now, making them available to take EMIs based payment or issuing debit card based EMI or issuing EMI on the device of payment that we have given gives us higher margin or more revenue. And that means that the credit access on the counter is a big opportunity for us to solve in the payment. And businesses like this start to give us revenue. When it comes to UPI-led business model, which is 0%, it starts the journey of customer on the payment business, but payments maturity on our platform and payments maturity on merchant side happens when merchants take payments from multiple and more than just the UPI-based payment system. That means that Paytm is able to take an advantage of customers' maturity to a larger and superior payment plan. And that is true for consumers as you and I, and that is true for merchants like a small shop to a large organized merchant. Large organized merchant or small shop will like to take payments from everything possible, not just a UPI payment. Small shop, yes, because I have to pay no MDR and no, I'm just entering into the ecosystem. Definitely will take purely UPI only based system, and that is where they are. So Paytm's payment business, agnostic of what happens to UPI or not, continues to make money because it is on the services and solutions that large merchant, medium merchants take from us, not just the line of type of
I take that point, Vijay, and my question is not only about what is happening with the UPI end of it, but I mean, JioPay is entering, for example, your payments business in a big way. You know how Mukesh Ambani operates. With his clout in the mobile and internet space, what he decides to actually take the hatchet in terms of the slice that you get from merchants and get huge market share in the payments business. Do you see that as a risk, the entry of JioPay?
Price war is not a war of revenue for us from the payment. We are the one who launched the price war, just in case. We are the one who get the heat from the market that why are you driving 0% MDR? Why are you asking for 0% MDR? Because I've seen that 0% or zero fee is what is a force multiplier of India's digitization. So I understand till the time period something actually gets launched in the market, I personally won't be able to comment, but I can tell you one thing, that pricing is not the moat or differentiation or the bet we are taking on the market. We are taking spread, we are taking large number of merchants and large number of consumers, and then this is exactly where my second and third line of business revenue model, financial services and commerce come in.